Consumer staples have lagged behind the other sectors over the past 3 months. Second worst performer, up just about 4%. But my next guest thinks it's due for a rebound regardless of who wins the White House. We'll get to that in a moment with Katie Stockton, founder and managing partner at Fairlead Strategies. But let's begin with a scene setter, Katie, on how markets have historically performed post-election.
You know, generally it has been a positive catalyst for the equity market. Of course, that's dependent on whether it's in a bull market cycle or a bear market cycle like 2000, 2008. And now, of course, we are in a bull market cycle still. Positive long-term momentum has benefited the major indices. However, what we noticed is that oftentimes the market would undergo a corrective phase ahead of the actual election day. We have not really had that if we reference the S&P 500, and that would suggest that maybe it's a bit more of a proof point for the market this time around in terms of its reaction. Our anticipation is that we'll get this sort of positive near-term action, but it could just be a knee-jerk that gives way to some corrective price action into year-end.
All right, let's move on to that consumer staples area that you want to highlight today. You say that some of these stocks have moved down and that they're showing signs of short-term downside exhaustion. I kind of feel the same way, actually. I'm suffering short-term downside exhaustion. Why do you think they are positioned for a rebound, and which ones?
You know, the staples sector started pulling back in mid-September, so it's had more time to reach that oversold territory, so to speak. And we've noticed that a lot of the constituents of that XLP Spider ETF or the Staples Spider ETF have become oversold near their rising 200-day moving averages. So look at the charts of Coca-Cola for one, Procter & Gamble, Kimberly-Clark, General Mills, all the names that you've heard of. And they're really big heavyweights in this space. So we feel at least that this would be a natural place for a rebound for the sector, which has seen that ABC corrective wave already. And at the same time, the relative performance, which has really suffered, as you mentioned, should rebound in kind, especially if we do see some corrective action ensue for the S&P.
When you see this kind of, when you are anticipating this kind of rebound, what would the amplitude of such a rebound typically be, or can you even say that?
Well, we can reference resistance levels on the charts to gauge upside potential. But in this case, I would say it's more about time frame. So in terms of the time frame from the indicators that we're using here, we would say weeks, not months. So something that's a bit more short-term in nature as a relief rally for the space. And that relative performance should kick in, especially if we see corrective action. So defensive properties, of course, behind those consumer staples stocks makes them do better in a more tenuous market environment.
Katie, great to see you. Katie Stockton, Fairlead, we appreciate your time today. Thank you.